Namaste, Vanakkam. I have discussed in my previous playlist about why stock market and why it is created, what are their significance, something about global markets and how do such things affect. So that playlist would have given you basic idea about why and what is stock market. Now I'm planning to start a derivative like FnO and cash. Not only FnO, derivative is a term, the actual term. This playlist will include the cash, shares, stocks, market indices, and equity, everything like all the derivatives. So first I'll give you the basics of derivatives, what is derivatives, how it is created, and what are these underlying assets for index and equity segment, all the. So let's start with this thing. The first thing you would have heard with many experienced traders or whoever belongs to finance background, they would have always discussing about derivatives. So what is derivatives? Derivatives are nothing but, I'll explain you this better with an example so you would understand this much better. If you see this car, I know you all might have seen this car multiple times and you would have recognized what is this. So this is a Rolls-Royce car worth 4,000, around 4 crore or 5 crore, whatever the amount. Let's not get into the amount, but this is a Rolls-Royce Ghost. Now its price in Indian, for example, let's take it's for 4 crore rupees. Now this car is for 4 crore rupees, but we'll focus more on the key of the Rolls-Royce, the key. For example, can we say this particular key, this car key is worth 4 crore? Is worth, I'm saying, is worth. Car is for 4 crore, I can understand, no, I have this much huge car. But in a way, can we say no, this key is also worth 4 crore? So yes, we can say that this key is worth 4 crore. How? Now this key is deriving its value from the Rolls-Royce Ghost car. So this key is a derivative and the Rolls-Royce is underlying asset. So very quickly you have understand the two technical terms of stock market. So the key is a derivative and the car is underlying asset. Likewise, if we go deeper and deeper in derivative, we have many segments like commodities, FnO future and options, and this commodities, equity shares, all these things. So combining all, we call it a derivative market. So whichever thing who derive its value from something is called derivative. You can read the technical term that derivative is a contract or a product whose value is derived from value of something, some other asset known as underlying. Likewise, I said the Rolls-Royce Ghost car is an underlying asset. The key is derivative. Now let's go to the next slide and see what we have. The main part here, yeah. So this is commodities, cash and equity. Now what is cash and equity? Just give you a glimpse. Well, I'll discuss these all in very deep. So what is cash and equity? Cash stock is like there was a very famous news around COVID when Indian stock market was on boom. So you would have seen some reels or videos that there was a guy who took some physical copies of MRF and said that, see, my grandfather bought this 300 rupees worth MRF share in 1985 or 1990, I don't recall the exact year, but he went to the SEBI or CDSL and said that this is the physical share I have of MRF at the 300 rupees price. Can you how can I get this in virtually? So we have a term in demat. What is demat? Demat is nothing but dematerialized. Earlier we have to buy the shares physically. Now what is physical? You will get a paper or something, but now we get that in our account. We just see, no, I am holding this stock. So this is cash and equity. This is buying or purchasing of a stock physically. Like you will not get any paper from now onwards. You just put a buy order, and within T+2, T+3, whatever the timeline is, the share will show in your portfolio. So now you are holding the share. Okay, that is cash. Again, you're not getting any paper or something, nothing physical. But if you have Tata Power, then the Tata Power is deriving the share of Tata Power is deriving its value from the actual one. So this is the derivative market. Now what is commodities? We trade on crude, we trade on gold, silver, and all these things. So what are you doing? You're not physically buying or selling gold or some biscuits of gold. No, you're just placing buy order on the multiple analysis, whatever you have, or any news based or any sentiment. You're just placing your buy orders with stop loss and booking your profits. So what happened? That particular gold is deriving its value from the physical gold. Again, the physical gold is an underlying asset, and on the chart on which you are trading is deriving its values. So we have many commodities. So metals such as gold, silver, aluminium, copper, zinc, nickel, tin, lead, etc. These all are commodities. Energy resources, oil, we trade on crude, coal, natural gases. So we usually trade on crude oil. We definitely not going with barrels and barrels to take the crude from somewhere. No, the chart where we do is deriving its value from the actual crude, and just we trade based on that. Cotton, there is a trading goes on cotton. So what do? You just put your orders, you do your trade and get the profits or loss, whatever you go. You're not going to take the physical delivery of that. There is a time, certain times on expiries, this will come in forward and futures, when you have to take the delivery, or when the contract expires, monthly expiries and all these. We'll go to this part later, very deeper. I'll explain you all. But if we just talk about derivatives, so we don't take cotton physically. We just trade based on that. Agriculture commodities such as wheat, sugar, cotton, this coffee, cotton, pulses, and financial assets such as shares, bonds, and foreign exchanges. So let's I have discussed the this commodities, crude, gold, silver, and all. I discussed the cash, shares. Now derivative is an FnO. Again, Nifty, Bank Nifty, Fin Nifty, and mid caps and Sensex. These all things are also the Nifty 50. You don't trade physically on Nifty 50 by going to NSE. No, you just see the Nifty 50 chart, do your analysis, and place the order either in futures or options. Now how these things works, we'll definitely discuss this in detail. Bonds are things which we do use. Now we have turned completely to virtual. We just see, we have done an FD and all these things, FD physical things. Now there are bonds also where we do trading. Bond market, US bond market, Indian bond market is like this is like this chunk of big money is in the bond market. Why? Because bond is considered as a safe asset. How safe? Because their return is fixed. In stock market, return is uncertain. You can't guarantee that you will get 7%, you'll get 7%, 8% or 10% return monthly or annually. You can't guarantee. Uncertainty is there. Returns are dynamic, but bond markets have fixed returns. So bond market is a huge, like the market cap of bond market is way greater than stock market. FDs, the fixed deposits. Now just go to your bank account online and you can open any FD. These all are deriving its value. You're not like, suppose in your account you have 10 lakh rupees. Example of derivatives, you have 10 lakh rupees. Now what happened? You just see 10 lakh in numbers. So what is happening there? You have 10 lakh in physical as well. If you go to the bank, you can take 10 lakh rupees cash if you want. But if you don't need that, then what happens? Your bank account shows 10 lakh rupees in number is actually deriving its value from physical contract, that physical money. So if your physical money is an underlying asset, the 10 lakh rupees notes and all in big bag or suitcase, if you take that physical, then you have the physical asset. But if not, you just see a number, 10 lakh rupees as number in your account. Now what's that? that the bank account is deriving 10 lakh rupees number. So in a way, you all have done a derivative. You have seen a derivative. Savings also in a bank account is deriving its value from physical asset. You don't go to bank to see daily, though I have 10 lakh rupees, is my 10 lakh rupees kept there? So these all things are virtually created. We just see there, though they have their physical relevance and they do exist physically, but we don't trade. In a way, it is safe also. So for safety and all concerns, I hope this derivative term is clear to you all. Later we'll go deep. I'm planning to start for the futures and FnO segment. So commodities, bonds, FD, savings, these all things are majorly not our part. My part is to bring you to the stocks and FnO. So from now I plan to start this cash and equity we have which discussed. So share market, how shares buying, selling and all these things, and in derivative FnO also. So I'll start with the complete beginning, like how future is designed, how stocks are designed, what is options and all these. So if you like the content, a like and share would be appreciated. That's for now. We'll meet in next video.